government shutdown does mean we didn't get the usual monthly BLS jobs report today, and that's a big one for the market, so without it, we're kind of flying a little bit blind. But we did get some alternative reports like ADP and JOLT showing higher unemployment, but the official BLS numbers are going to be delayed until Congress sorts all this out. But even without the Fed, without that report, Fed members are out talking, and they're still split. Some insisting that the labor market's still strong, but like we've talked about, the reality on the ground looks a whole lot different. We're losing jobs, layoffs are climbing, and the hiring rate for people out of work is actually trending lower. Real-time unemployment numbers show we're already close to 4.4%, which would have made headlines if the official report had been released, looking like that. But on the inflation front, there's actually a disconnect there too. The Fed's preferred measure is core PCE, and that's showing higher than the 2% target the Fed has, but most of that's really because of how they calculate that number. Shelter costs get inflated by something called owner's equivalent rent, and basically that's what people think their home could rent for, which a lot of times is unrealistic. And that alone is overstating inflation by at least 0.3%, and tariffs are adding another 0.3 to 0.4%, depending on who you ask. And portfolio management that we talked about last week, those costs are showing up as inflation even though it's not really price growth. So if you strip those out, we'd already be right around the Fed's target. Now keep in mind when mortgage rates move with inflation. So when inflation's lower, mortgage rates come down, and oil prices are actually also coming down, which should help ease inflation even more. And Fed officials are under pressure for being slow to cut. And the New York Fed president even said the door is open to more quantitative easing, and that's something that could directly help mortgage rates come down. The economy, like I said, showing more weakness, and pressure, like I said, it's building for the Fed to cut again. But for now, rates are likely to hold steady or maybe even improve a bit while the shutdown drags on. Next week, we'll get home appreciation numbers and the Fed's meeting minutes, which should give us some more clues on where we're headed. But with the shutdown, it is hard to know what to expect. But I'll see you next Friday. Have a great weekend.